Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to do something at the request of one of our longtime and loyal viewers, so Vertical Wisdom, thank you very much. On a previous video, he was asking about setting up companies in Barbados. So I'm going to talk today about utilizing Barbados. I'll give a quick little history on what Barbados was like, kind of its relevance historically, how it's changed in the last few years, and pros and cons of working with Barbados, because it's a place that in certain circles is totally ignored, and in certain circles has been maybe overly promoted, and there's probably somewhere in between. So we're going to dive in and discuss it right now. Before we do, if you haven't already, please hit the subscribe button, hit the all notifications. I really appreciate you subscribing. Thank you very much for supporting the channel. If you'd like help with international tax optimization, forming companies around the world, setting up bank accounts, getting residencies, getting citizenships, international second passport, citizenship by investment, etc., please reach out to me. You can book a call, calendly.com/Michael-Rosmer. There's a link in the description below. Or send a message through our websites, offshorecitizen.net and offshorecapitalist.com. Okay, so Barbados, for those who aren't familiar, I did a video the other day on their digital nomad visa, or what's called their welcome stamp. And so, that's cool. It is, if you kind of go in the Caribbean, there's this layer of islands, and it's kind of down towards the bottom, right near where it touches South America. Not quite there, but almost there. And so Barbados has for a long time been a traditional tax haven, in particular for Canada. So I've talked about this in some videos on Canada, how prior to 2011, there was a whole big deal where in order to profit from the exempt surplus rules in Canada, you had to have a country that had a double tax treaty. They changed that and then allowed countries with tax information exchange agreements. And so prior to that, it was really the only or one of very few very close to zero tax. At the time, it was 2.5% tax, and I'll talk about that in a second. There was a change in their regime just recently. 2.5 down to 0.5% tax regimes that could be paid, and you could take advantage of this. When 2012 came along, you didn't have that anymore, so that wasn't a concern, okay? And so all of a sudden it opened up a ton of other countries, but mainly Canadian like service providers, et cetera, lawyers, et cetera, just kind of kept going with what they knew. So there was some, maybe not necessarily going to the best options at that point in time, but people tend to do what they know. So there was that. Now, what they had back then was they had two different types of companies. They had a regular business company and international business company. And so the international business company was the one that had the really low taxes. And what exists today is that you have a higher tax rate, and the more money you make, the lower the percentage goes. So that was what happened previously with the IBCs as well. You'd also had these RBCs, the regular business companies, and those were actually fairly high tax, right? They were 25% corporate tax. And so what happened is around 2018, we started to get the implementation of rules pushing other countries to have substance, et cetera. It was seen as a bad thing to have different corporate regimes within a country. And as a result, Barbados ended up changing their rules to kind of consolidate into one type of company. And the way that worked is that they no longer had RBCs and IBCs, although the IBCs were grandfathered in up until 2021. And the new way that it worked was you started at 5.5% tax rate and went down to 1% tax rate. So it was for the first $1 million Barbados dollars of profit per year, you had 5.5, then it would go down. And so by the time you hit 30 million Barbados dollars per year, you're down to 1%, okay? Now just for context, the Barbadian dollar is pegged to the US dollar at a rate of 2 to 1, so 30 million Barbados dollars is 15 million US dollars, okay? So that's how you can understand that. So is this a good option? Was it a good option? How did this all work? Well, a few different things. It always depends on your situation, right? So I always tell people this. I had a call with some clients the other day, and they were talking to various different people, and those people weren't considering the fact that, hey, they have payment processing, they need something like Stripe, they need certain banking, they need on and on and on, right? And so the solution was more or less useless because it didn't fit their needs. And so somebody else might not be in that situation. They might have a totally different set of needs, and as a result, totally different set of optimal criteria. Okay, so always worth understanding that every situation is different. This being said, what's good in Barbados? So there's a kind of a unique, interesting thing that was true in Barbados that set it up in a little bit of an interesting path. So how did this work? In Barbados, if we go back to historically what happened, so they had this tiebreaker rule with Canada and the tax treaty, which allowed you to overcome the management and control rules in Canada. Okay, so that was a good thing. What happened in the process, though, was that in order to be considered Barbadian tax resident, they had to be managed and controlled in Barbados. So Barbados had this concept of domicile, resident, and then non-domiciled, non-resident. And so you could have any of these. Domiciled meaning formed there, resident meaning managed and controlled there, and so it could be either domiciled but not resident, or it could be resident but not domiciled, and it could be domiciled and resident. Okay, so important to understand that. And different slightly rules based on that. So what this meant was that in order to have a Barbadian company, you had to have a local fiduciary. And this is part of what made it somewhat less popular for a lot of places in general, because you couldn't just, as a foreigner, go and register a company in Barbados and have nothing to do with there and benefit from a lot of the stuff that went along with it. This is kind of similar to what you get in places like Bermuda. Typically you'll see this. Sometimes you'll see it with Cayman Islands, a little bit less so. Jersey, Guernsey, to some extent Isle of Man, again a little bit less so. Some of these places, they've decided that the way they want to protect their regime is to require local management. And this is built partially around the rules, it's partially around maintaining a reputation that's a little bit more white, etc. So it means that you incur some extra costs to have a resident director there, okay? Now, one of the things that made Barbados kind of unique is Barbados actually has a pretty established banking system because a lot of the Canadian banks are there. So if you go to British Virgin Islands, for example, there's just no banking available. Whereas in the case of Barbados, you actually could get banking. And to this day, there is some decent possibilities if you're willing to set up a company in Barbados, have a Barbados director, Barbados banking, etc. You can be set up reasonably well there. And some people really like the idea that they can pay, some tax, but very low tax, right? So again, 5.5% down to 1%, pretty low numbers, right? It is got a reasonable network of tax treaties, which is unusual for like offshore tax havens, I guess I would say. So for instance, again, some place that has no tax, like British Virgin Islands, will only typically have tax information exchange agreements. They won't have double tax agreements. And this means they don't have, say, a residency clause that has a tiebreaker in it. It won't have favorable rates for dividends, royalties, interest, things like this. And so those become all factors that are useful to be aware of. This was the case, and it was something that was kind of overlooked for a long time in the US. The US used to have a rule where in order to repatriate dividends to the US at the qualified dividends rate, you needed to have a country that had a tax treaty with the US. And it turned out almost the only countries that had really low tax were Malta and Barbados. So kind of interesting. Most of the other ones didn't have a tax treaty with the US. So there's that. Now on the flip side, it's going to be a blacklisted country from the perspective of a country like Portugal, right? So, okay, you don't really benefit in that regard. It's just below their threshold of tax. And so it really depends where you're setting up if this makes sense for you. Where I would say this makes sense is if, number one, you don't need payment processing. Okay, so payment processing basically is out in countries like this. So if you're receiving income via wires, great. If you're willing to incur the extra expenses, which increasingly probably makes sense to have somebody in actually there who's a fiduciary, who's managing the company, etc., great. And you're looking for relatively okay banking. You can have, like I said, the major Canadian banks are all there, so that's good. But you don't need much in the way of real operational substance because you have a small talent pool there. The talent pool is also, it's Caribbean, right? So kind of the hard work, making things happen, etc., is not optimal from that standpoint. So in that regard, not so good. It also can be good from a holding company regime perspective because there's no capital gains tax. in those companies. So that's really great. And yeah, so that kind of gives like the subsection of if you're in those, then you can say, okay, perfect. This is a possible use case for Barbados. And then I'm going to say, does it fit with the countries that I'm in? So with respect to their CFC rules, with respect to their substance rules, if you have someplace like Denmark that uses the concept of day-to-day management and control, it probably doesn't work for you. If you're in, like I said, someplace like Portugal where it's blacklisted, it probably doesn't work for you. But if you're someplace like Canada, maybe it does. If you're someplace like the US, it used to, but now because of the way that guilty tax rules work, probably not the best option for you. If you're someplace else, maybe it does work. So it's not a place that we use often. It's not an especially popular jurisdiction for most of the world, but actually is probably better than it gets credit from most of the rest of the world, and then it probably gets too much credit from Canada. So I hope that helps. Hope to give you a little bit of an idea of what's involved there and kind of why it's got some pros, why it's got some cons. Certainly in the Caribbean, it's had some major advantages, and yeah, that's that. So if you have any questions, put them in the comments below, and I'm going to look forward to seeing you guys on the next video. Follow me on Twitter, again, at Michael Rosmer, and I'm going to see you very soon.